with the stock market plunging a humongous amount lately. Many investors are buying the so-called dip in the market. It is certainly impossible to time the market, but the stock market crash just is not over yet. In this video, we're going to look at the CVD and why there's so much more potential for this situation to get worse. First of all, I'm not a financial advisor, so take my opinion with a grain of salt. I'm not giving financial advice, and I'm just an investor reflecting my thoughts on the current situation. So with that being said, please hit the like button, subscribe, and let's get right into it. This video will contain some code words including CVD and FOU. I hope you guys understand what these code words are, as throughout this video I'm going to keep using these code words. First of all, let's clear the misconception between the CVD and FOU. The CVD is certainly not the FOU. The CVD is estimated to have a death rate of 2%, whereas the FOU has a death rate of only 0.1%. Along with this, the CVD is also a lot more contagious, which means much higher exponential growth. For every person that gets infected with the FOU, it is estimated that 1.2 more people get the FOU. On the other hand, for every person that gets infected with the CVD, an estimated 2.4 more people get the CVD. In hindsight, this may not seem like much of a difference, but it really means much more than you may believe. Because the CVD has such a high contingency rate, it yields much higher exponential growth. In hindsight, the US's mere 500 cases may look as if it would create a tiny impact on the US's gigantic population. But it's just the start of much more to come. The problem with the US is that many people are not worried about the CVD. Personally, I live in the US, and based on what I'm seeing, nobody is concerned. When you look around the area, there aren't that many people wearing masks, and the ones that are the people that are already sick. However, this video isn't about whether masks are effective or not. It's about the fact that people not wearing masks shows a key sign. It's a signal of an upcoming outbreak within the US. When people are not concerned and are not taking actions to prevent a spread, this will increase the exponential multiplier by a significant amount. Even just tilting the multiplier by a slight amount has a huge impact on the results. At the time that I am recording this video, the US currently has 600 cases, and this is because the CDC isn't testing enough people. This limited testing is a major cause for concern. Many times, suspected carriers of the CVD are rejected testing by the CDC. And this is simply because the CDC doesn't want you to think that the outbreak is coming in the US. One patient was not tested for several days despite multiple hospital staffers telling that patient to stay at home. The UC Davis Medical Center attempted to contact the CDC for a testing kit. However, since the patient didn't fit the existing criteria from the CDC, he was not given a testing kit. After wandering around for several days, he was tested positive. And this is the type of limited testing we're constantly seeing from the CDC. An outbreak is occurring in the US right now, but the CDC doesn't want you to think that. As we stand right now, many countries are on the verge of an outbreak. I agree that not all the countries will see a similar outbreak to China, but even if 50% of the countries including Italy, France, Germany, Spain, the US, the UK, and many more get into an outbreak, the global market would collapse. Once these countries get into the China effect, workers won't be able to go to work. This will lead to extremely low PMIs and eventually stimulate a stock market crash. As for China, the market didn't crash for very long, but that's a special case. And we all know why the market's still going up despite increasing cases outside of China. As the stock market crashes, investors will be panic selling and withdrawing their money from banks, and these banks just won't do well. Out of the massive debt companies already have, and companies will begin to collapse. This is especially true when travel is restricted. With the Embargo Act of 1807, the economy crashed in the US, trade was removed, and consequently, this led to the market's eventual downfall. When all these countries begin to close ports, we'll see a similar effect. The US has already closed travel between South Korea and Italy, with Italy quarantining the entire country. This isn't just an issue that will last for a few months, this is an issue that's getting worse. We're currently at the beginning of exponential growth outside of China, and this will get worse. One way to prepare for the eventual spread of the CVD is to buy put options. You can buy these options on 3 times leveraged funds like TQQQ and SQQQ, or you can just simply buy put options on SPY. I wouldn't recommend putting a large amount of your portfolio into put options, as these options can be extremely risky during market volatility. Another way you can prepare yourself is simply holding cash or buying into commodities like gold and silver. That way, if the looming recession really does come, then the value of your commodities will increase significantly. Another option that many investors are doing right now is to hold cash. Once the stock market drops further, unload the boat and buy into stocks, because everything we're seeing right now are short-term causes for concern. If you enjoyed this video, please hit that like button, subscribe, and I hope to see you in another video.